There we go. Okay. James, good afternoon. Thank you for joining us today. We have James Raymond, expert on reverse mortgages from Mutual of Omaha. And we're going to go through some of the different options that are available for reverse mortgages where they make a lot of sense for some people, especially those that are in retirement. Well, it has to be almost exclusively for those that are in retirement age, and some of the different financial planning aspects that really make a reverse mortgage attractive to a certain segment of buyers and current owners of properties. And I want to thank you very much for joining us today, James. Thank you.
You're very welcome, Dan. It's a pleasure to be here. I'm excited to go through these slides. They just updated this deck for us, so bear with me as I see some of the newer slides. So excited to do this for your folks and see if a reverse mortgage, although it might not be the right time, it's never been wrong for anybody that I've done one for. So, yep, take it away.
All right, sounds good. Well, let's move along. Move along to this next slide, and really basically considering retirement and the three L's of longevity, lifestyle, and liquidity. Three big areas of life.
Right. Yeah. I mean, it's super important. I mean, people ask all the time, are they going to have enough money? I just recently read something that people are more afraid of running out of money than they are passing away. So it's true. Like when you're gone, you're gone. You don't have to worry about the bills anymore. And nobody comes back. I haven't met anybody that's been back yet. So the answer is, yeah. I mean, running out of money is important. And then, guys, just as I apologize, Dan, we probably should have had a disclaimer earlier, or not a disclaimer, or just a general information for folks who don't know. I've been in the mortgage industry for many years. I've been selling reverse mortgages for almost 25 years. So I might know a thing or two about the product. And like I said, it's never been wrong for anybody when it's been done the right way. I don't do them the wrong way, and neither will Dan. So like I said, we're excited to move forward here. So guys, longevity is super important. Let's not run out of any money. So this way you can maintain a lifestyle. Now, again, we can't overspend, or, we don't want to turn around and just have a bunch of money and go reckless with it. But, we want to use, if we set up a reverse mortgage the right way, it appeases some short-term concerns and creates money for long-term access, which is super important. And like we said there, liquidity. Will I have enough access to a tax advantage money when I need it? The answer, I guess, the simplicity behind that is a reverse mortgage is technically a loan. So none of the funds you get from a reverse mortgage are taxable. It's a loan that must be paid back. Maybe not by you, but sometime in the future by the house. Go ahead, Dan. Next slide.
Well, I was thinking it's kind of nice to have the house working for you instead of you working for the house. But we'll go to the next slide.
Absolutely. So reverse mortgages, how they work, uses and benefits. So let's move on. So reverse mortgage benefits, it's a low risk, government insured, non-recourse loan. What does non-recourse loan mean? Non-recourse means that the only asset that secures the loan is the home. I'm going to say that again. The only asset that secures the loan is the home. Your benefactors, your heirs, your estate, they don't have to reach into their pocket. Okay, so like I previously said, funds are non-taxed. Absolutely, you always want to talk to a tax specialist, but I can tell you that they're non-taxed. You can choose. You can use the funds however you choose. You can use it for whatever you like. I like to say, if you want to put it all on 7 Black, that's your prerogative. We're never going to recommend that, but make sure you use it wisely once again, so it appeases some of the short-term concerns and gives you access to money over the long term. There are no prepayment penalties on a reverse mortgage. You can pay it off or down at any single time. Super important to realize. The old reverse mortgage, or prior to the Reagan years, was a bad loan. And that's what a lot of folks in this demographic have heard the rumors about. The new loan, the new reverse mortgage, it's really, all the benefits are in the borrower's court. It's very few benefits for lenders. It's a long-term investment. So there is a line of credit with a reverse mortgage. It's guaranteed and grows over time in credit accessibility. It doesn't pay you dividends. It doesn't pay you a monthly income stream. It increases in credit accessibility. And that's something that takes a little bit more time. When the loan becomes due, the homeowner does not owe more than the home's value. I may have covered that already. Any remaining equity beyond the loan balance belongs to the estate. Heirs may retain the home by paying the lesser of the loan balance or 95% of the appraised value of the home at that time. So let's just say there is a correction in housing. Everybody might remember 2008. And let's just say there was a massive recorrection and somebody owed $100,000, but the home was only worth $50,000. We're just going to use that as a very simple example. Your heirs could buy that home for 95% of that $50,000, which by my math would be $47,500, if I'm correct. So they could actually buy it for $47,500. So they'd be buying it back up. People say that reverse mortgages are too good to be true. No, they're not. They're certainly not, because the interest is accumulating on the back end, and eventually it does get paid back by the house. But it does, like I said, if done properly and used properly, it lasts. It can last a very long time. Next slide, Dan.
Cool.
Okay, most common uses. Dan, we talked about this and how we wanted to handle this. It's eliminate a monthly mortgage payment. Yet you don't have to have a loan to get a reverse mortgage, but most times we're paying off some sort of current mortgage or debt against the home. Provide a line of credit for future financial needs. We just discussed on that. That takes a little bit more in depth. If we had a greater amount of time, we could explain that. But simply any unused funds in a reverse mortgage with the adjustable rate product get set up at a reverse mortgage line of credit. And that line of credit, as I previously stated, actually grows over time. You can purchase a home without spending all of your cash. So a lot of folks don't realize that. And what you might find is someone like me who's in a cold and more humid place on the Northeast. We move from this area and we come to the Southern Californias, the Floridas, the Texas, the Arizonas, those areas of the world. Or maybe we like it to be cooler, but we want to move to, say, Washington or Oregon. We don't have to exhaust all of our funds from our current home to purchase the next one. And a lot of us may not even qualify for a new loan because we're retired. So next slide. Other common uses: consolidate debt or pay off other debt. Very simple. Supplement your monthly income. They can send you monthly income. Retirement planning tool. Guys, right now, I'm going to stop there real quick. People, we're not here to offer retirement investment advice, but we can give you a simple idea of what that means. You might have a home that's worth a lot of money and you have a ton of equity. And maybe your stocks and bonds right now have taken a hit in the market. Well, do you want to sell your stocks and bonds as they're taking a tank, or do you want to sell them when they come back, okay, at their higher values? I think buy low and sell high is smart, not buy high and sell low or buy and sell low. We want to sell it when it gets back to its proper values. So you can actually, during that time, instead of selling your stocks and retirement, your 401ks, your IRAs, your stocks, your bonds at lower values, you can actually use some of the reverse mortgage income, available funds. And then you could pay off the reverse mortgage with the stocks when they come back to a higher value. Very simple, non-sophisticated plan. Use it for remodeling, home repair, or maintenance. A lot of folks years ago used to think, I want to get this so I can go into a nursing home. No, you don't. You want to stay home. Nobody wants to go into a nursing home unless they really, really need to. Okay? Everybody wants to stay home, especially after COVID. I know, good Lord, my mom keeps telling me if I stick her in a home after COVID, she's coming to haunt me. So long-term and in-home care, create a cash reserve for emergencies, funds for travel and recreation. I don't like to talk about that part too much because we want to use it responsibly. Now, if you have a tremendous amount of equity and we loosen up some money and you wanted to go on spend a couple $1,000 for a vacation, but Lord knows we can't put you on the QE2, the Queen Mary. We can't put you on the QM2, whatever it's Queen Mary, Queen Elizabeth, I don't know what it is now, and put you on a lifelong cruise. There's only so much money. And once again, we already talked about purchase a home. I don't like the word downsize. I like the low right size. Okay. I don't need 2,500 square feet, or I want to be everything on one floor. I don't want to have to go down into the basement to do laundry. Move closer to family. Super important, guys, as we age. Plus, most people like their grandkids, and they're fun to have around. Next slide, Dan. What's a reverse mortgage? So the proper term for a reverse mortgage is a home equity conversion mortgage. That's the FHA, or the government sponsored. We use the acronym HECM, HECM, or reverse mortgage. It's a unique loan that enables senior homeowners 62 plus to access the equity in their homes without having to sell the home, give up title, or make monthly mortgage payments. Once again, we're never going to turn around and tell you it's too good to be true. There are closing costs with a reverse. And if it makes sense, it's a loan for you. If it doesn't, by all means, Dan has access to more products than I do. That's for sure. Dan?
We sure do. We have a lot of access.
Guys, I'm going to take a little drink of water here. Go ahead.
Sounds good. Next slide. Here we go.
How it works when we're talking about that FHA reverse mortgage, somebody at the time of closing must be 62 years old. It must be the primary residence. You do have to pass a financial assessment, which is willingness and capacity. And we do look at your credit report. The old days of I'm old enough and I have enough equity, you get the loan. The answer is not any longer. Loan quality is super important for the underlying bondholders, which in this case is Ginnie Mae, and FHA oversees this product, and they want to make sure that you are economically sound enough to maintain this property. If you're not, guys, you don't just get the loan. You have to go through a credit. We have to review your credit report, make sure you can pay your other bills. Nobody wants your home, guys, and that's where a big thing is. People think banks want homes. No, they don't. They want interest. So your responsibilities: live in the home as your primary residence, pay the property taxes, HOI and homeowners insurance and homeowners association dues, if applicable, and maintain the property. That means if you're here in the Northeast region, you got to mow your lawn. If you're in Arizona, just rake the sand and the rocks a little bit just to make sure that nothing grows up there. Okay. Super important, guys. You can't, we've had some very unfortunate things over the year, and you learn and you learn as time goes by. The home from the outside looks incredible. The town gets a report of something, and unfortunately somebody has slipped into some some issues where a borrower has become a hoarder, or there are a tremendous amount of animals living in the home, which is not healthy, right? Guys, you can't have several hundred cats or dogs living in your home. That's unhealthy, but you'd be shocked what we've seen. So benefit is determined by the age of the youngest borrower or a married couple on title, the appraised value of the home, the interest rates, and the product chosen. So I don't want to say current expected interest rate. That's a little confusing, but that's what they put in there. The expected interest rate is not your actual rate. It's what sets the loan to value based upon the age of the youngest borrower or the youngest spouse. Okay, you can get the benefits in several ways: lump sum, monthly payments, lifetime payments, or lines of credit. Most people choose some sort of distribution and the line of credit, because the line of credit has a great growth feature and can set you up for some really good money down the road. Dan, moving forward. Okay, safeguards. Borrowers are protected by a wide range of safeguards, making the HECM the safest, most regulated HUD mortgage available. And I will stop here, and I will say that every single reverse mortgage that gets originated gets audited by multiple people, such as the FHA and HUD, such as the underlying bondholders. there is absolutely, if there's any thought that something's been done wrong, lenders are stuck holding these loans. They can't sell them. And what does that mean if they can't sell them? That means it's actually costing them to have the loan. So rest assured, they're very regulated. They're done right. Like I previously mentioned, the the loan is in your favor, in the borrower's favor most of the time. The homeowner absolutely retains title to the home as long as the loan terms are satisfied. You live in the home, you pay your taxes and insurance, maintain the property, and if you have HOA dues, you haven't fallen into default. The homeowner estate is entitled to all the remaining equity. I didn't say that earlier. The home's worth $500,000 and you owe $50,000. By all means, that $450,000 belongs to your family, okay, whoever it is. Third-party counseling, we say this, is mandatory prior to application. That's actually, it depends upon the state, but you can get your counseling, except for 5 or 6 states, anytime. However, you can't. Someone like Dan or Mutual of Omaha, who services Dan's loans, could never take the loan do anything until your counseling is complete. And those counselors are independent and third party, and they're approved by HUD and FHA. And it's their job to make sure Dan has explained all the positives, but also the pitfalls. And if he hasn't, they will tell the borrower, the borrower, that this may or may not be the right product for you. Or they're also going to say, hey, it sounds like Dan doesn't know what he's doing, which in this case he does. Okay. But you might want to talk to a couple of other loan officers. So they work for you guys, not for us. The equity line, that reverse mortgage line of credit, it cannot be canceled, frozen, or reduced. It can't be taken away as long as you want. Live in the home as your primary residence, upkeep the home, pay your real estate taxes, your homeowner's insurance, and your HOA dues if you have them. Okay, and the line of credit grows regardless of the home value. Now, once we get into the nitty gritty, when you call and you'd like to look at this, Dan will provide you with an example and amortization schedule so you can see what the numbers actually look like. Dan, moving on. Myths versus facts. Go ahead.
There we go.
The lender is on title or owns the home. We already covered this. No, the lender is not on the title. The title is yours. It's just like having any other mortgage product. The lender doesn't become the owner. You're the owner. However, there is a lien against the title. Okay, and that lien would be by the lender, or say in this case, Mutual of Omaha reverse mortgage. Okay, so you have the power to sell or refinance at any time. Okay, again, whatever you owe to what it's worth, you're in the positive, you pay it off, you go get yourself another loan or another home. Go ahead. The funds received, well, we already talked about that. A reverse mortgage is a 100% non-taxable event. It's borrowed money. Always talk to your tax specialist, okay? But if I'm borrowing money and I have to pay it back, that is not income. Moving forward, I think just back up one quick there. If you happen to be an individual that's on Medicaid, that is when this could potentially affect you. You have to make sure, for those of you on Medicaid, you know that at the end of the month, you can only have so much money in reserves. So we've got to make sure you never take too much, or that you make sure whatever you take, you've spent. So that's the only time maybe that you want to pay special attention to. You need to speak to, Dan and I are not Medicaid specialists. Speak to your Medicaid advocate. Thank you, Dan. Moving forward. Reverse mortgages are risky and the funds are not guaranteed if something happens to the lender. Totally untrue. They've changed a great deal since 60. The HECM in place since 88 is now the safest, most regulated HUD mortgage available. We went over this already. They are FHA insured. A HECM is not a proprietary lender product. What does that mean? It's not just distinct to a group of people that decided to pull some money and lend it off to you folks. It is a HUD regulated FHA product that is completely regulated. Next slide. 4, the borrower can end up owing, guys, we covered some of this stuff already. The borrower can end up owing more than the home is worth. Untrue. Non-recourse. The loan is not secured by any assets other than the home. If the borrower was to owe more than the home is worth when the loan becomes due, an FHA managed insurance fund will cover the shortfall to the lender. Now, again, when we talk about not too good to be true and people look at the fees, they say, wow, it's a little expensive. That's why. So this way, your children, your heirs, your grandchildren don't have to reach into their pocket. Next one. When the reverse mortgage becomes due, either the lender takes or sells the home or the heirs lose their inheritance. Once again, things we've kind of covered. Heirs may still receive an inheritance if after a home is sold and the balance of the mortgage is paid off. All remaining equity will belong to the heirs. No assets other than the home are used to secure the loan. Once again, they pushing this home here, guys, throughout this slide presentation. This is a non-recourse loan. Moving on. If a borrower outlives their life expectancy, the lender will kick them out of the home. False. A borrower cannot outlive the reverse mortgage. I'm going to stop there for a second. Actually, you can. You can't become older than 150. I don't know anybody that's made it, okay, but I've been around for people that have been 107, 108. Nobody's made 150, and I can guarantee you if modern medicine gets us there, they'll change it to 200 right quick. But you cannot outlive the reverse mortgage. The borrower cannot be forced out of their home as long as their property taxes and insurance maintain the property and it is their primary residence. Moving on, Dan. You can never get out of a reverse mortgage. Guys, we kind of covered this already. A reverse mortgage has no minimum term. You could get it today and close it tomorrow. That's your choice. No reason to do that, though. That would cost you some money.
Yeah.
Myth 8, a reverse mortgage can impact my Social Security and Medicare. Totally false. Now, once again, we talked about Medicaid. Medicare and Social Security are totally separate. Okay, you paid into Social Security to get you paid into the Social Security program to pay for those that were receiving Social Security. Our taxes cover your Social Security and any Medicare benefits. Medicaid, different animal, totally different animal. Once again, it says it, consult a program specialist. A reverse mortgage may affect benefits or eligibility for some government programs, such as supplemental as Social Security income and Medicaid. Right there, the small print, as they say.
Right.
Dan? Reverse mortgage for home purchase. It's been around since 2009. It can be utilized to purchase a primary home only. It's assisting borrowers in downsizing, right sizing we call it, moving closer to family or moving to a more desirable community, etc. Compared to cash traditional financing, borrowers can significantly increase their purchasing power, reduce out-of-pocket expenses, increase your cash flow, and keeping liquid assets available for other uses, eliminating monthly mortgage payments. Let me give you an example. Let's say tomorrow I sell my home, and after all taxes and after all fees paid to the whoever had to be paid, I walk away with $500,000 in cash. Well, say I'm in my late 60s, early 70s, and I have officially retired. I'm no longer working. I'm not going to qualify for any other type of traditional financing. All I have is Social Security and an IRA. So I walk away with $500,000, and a lot of folks, let's go back to that minor sophistication model we talked about earlier in the slideshow. I walk away with $500,000, and I go out to say Arizona. I like Arizona, okay, and I find something there for $400,000. Well, the old school of thought would be, well, let's just pay cash for it. and never have a monthly payment again. Well, you just got rid of $400,000 of your money. Now you only have $100,000 available to you. How about if I show you a way to take, now I walk away with 500,000 and I go out to Arizona and I find something for 400, and how about if I put down $250,000? I never have a mortgage payment, and now I have $250,000 cash in my hand, of which I can put some furniture in the house, put a little bit of money aside for fun in a rainy day, and then maybe take some of those dollar bills that I have and turn them into employees. And employees, we want our dollar bills to work for us. Now you can go speak to a financial advisor. Maybe Dan knows somebody. If he does not, you can do your own research, and you could take that remaining in those dollars and put them into some sort of income producing vehicle that could take that money and make it work for you. It's never recommended to talk about annuities. We don't want to have that conversation. Okay. But if you want to put it in some sort of safe stocks or bonds or something like that, we just don't want to take the money and buy a product that eliminates access to the money and spits off a small amount. You want to have something that could eventually become liquid. Guys, that's not hard to do. We just talked about a little bit of financial sophistication there, and I hope I made it simple.
Yeah, sure.
And I don't know if you want to jump in. You jump in here anytime you want, but I'm happy to keep going on. I speak for a living, so I'm coming to you live from my kitchen in New Jersey for anybody who doesn't know. And I'm sorry for the accent. I've worked hard to get rid of it. Good Lord just gave me a New York, New Jersey accent. Sorry, guys. Learn more. Am I eligible for a reverse mortgage? Well, if you're old enough and have enough loan to value, your credit is good enough, and you pass the financial residual requirements, the answer is you're going to qualify. But it's all based upon your distinct scenario. How much money is available? How can I get a quote? Well, that's what Dan and I do. Dan calls me up. He tells me, Jim, I need this. I send it back to him, and we're rocking and rolling. What terms and rates are available? Can I use a reverse to purchase a home? Guys, these are some of the questions that we've already kind of covered, but moving on. Okay, 4 additional. So here we go. Dan, you didn't turn around and hide that one. So for additional questions, you can't call me. You know why you can't call me? I am not a licensed loan originator any longer. So Dan is, okay? Because if you call me, I can't give you the right answer. I can't talk about rates and terms and fees. I don't do that any longer. You know why? Because I'm a wholesale guy. You know why? Because I move fast. And Dan will tell you, I'm really sweet until I'm not. Okay. And I'm not allowed to do retail loans because I have forfeited my licensing so that I can help loan officers nationwide help individuals such as yourself and their families learn the facts, the myths, and see if this program works for you now. So why don't you take that screen off, Dan? And if you have any, there's all our fun stuff. That's, again, reverse wholesale. Dan, why don't we, if there's any questions that came up through that, I know I've been talking for 30 minutes, but that's what I do. And Dan, ask me some questions that you think that some of your potential clients might ask you. We'll play a little role playing here, and I'll do the best I can. And you tell me when we need to disconnect this. I don't know how long we should go for. I'm not. This is your show, not mine.
You've been doing it's fantastic. Thank you very much, James. You're doing awesome.
Great, thank you, Dan.
Really brought a lot of understanding to the reverse mortgage sphere, if you will. It's been fantastic. Do want to ask you a couple quick questions on,
sure.
And I think it's a really important point right now. You mentioned the right sizing and to using a reverse mortgage to purchase a new home, basically. And that's something I think that really goes underappreciated in the marketplace these days, to a large extent. And so, I was just wondering, could you expound a little bit on that, above and beyond a little bit what we talked about already? Would that be okay?
Yeah, sure. So let's just use my neck of the woods here, where I am in the northern New Jersey area. Most of the homes have basements where the mechanical rooms are, such as water heaters and heating systems and washers and dryers. Most of the homes have just a tubs or showers. They don't have walk-in capabilities. And a lot of times bedrooms are up on second floors. So your traditional, colonials or capes, they're multi-floor homes. So let's take my mom, who's 80 years old, 79. She'll be 80 in December. Reminds me of that every day. So we'll take my mom, for instance. So she's got really bad knees, terrible knees. Now she'll just keep suffering. God forbid she goes get them fixed, but that's not what old Italian women do. Now I don't know if I'm not supposed to say that, but that's what older Italian women do. They like to tell their kids how much they're suffering. So if I had my way, I would have told mom how to sell her home, but she doesn't want to move. It's okay. And I would have had her purchase a ranch style home. No basement, no upstairs, everything on one floor. Maybe have a shower that's walk-in, a tub that's walk-in. So right sizing or setting up a home is what we'd like to talk about. Do you need a 4,500 square foot home? The answer is probably not if you're by yourself or it's just you and your spouse. Okay, maybe or maybe it's your sister. We have a lot of twins that do these together. Okay, or we have an older siblings that are of age. They do it together. They've inherited a home from their parents, and they fix the home up so it's more comfortable. It's easier. It does have some of the safety bars installed, opening up doorways for maybe possibly some wheelchair access. So instead of taking that money and using it to go into a home, a nursing home, people fix their homes up. And that's what I like to say by right sizing. Or they sell their home because it's so darn big, and they move to an area that specializes. In Jersey, it's the southern part of the state. They have 55 plus communities everywhere. And those homes are set up for what I just said. Single story living, nobody's up and down, no necessity for basements. It's just a more comfortable way. Dan, did that make kind of sense?
It makes total sense. It totally makes sense. Thanks. I appreciate the
Great.
the additional color, if you will.
Great.
James, I want to thank you very, very much for joining me today. It's just been an honor. You're the expert. You are the man when it comes to reverse mortgages, and I just want to thank you for helping illuminate a lot of the questions and misperceptions that we might have out there. And for my customers, they really are going to appreciate having your wisdom and expertise. And I want to thank you very, very much.
Well, listen, Dan, you're quite welcome. I hope I made a few little chuckles there. Sorry, it's that East Coast thing, guys. We have to pick on what makes sense to us. But it's been my pleasure to help you and shed a little light, guys. The reverse mortgage product is not difficult. It's not hard to understand. It takes a little bit of thought process for somebody who is trained, such as myself and Dan, to first of all assess your situation and then figure out if it is a reasonable product for you. And if it is, just don't run from it. Listen to it, okay? And if it makes sense for you and you do this the right way, you'll see when Dan provides you with your, unique individual or proposal, will lay it all out. You'll see, wow, you'll be able to make that decision. Geez, it's not the right time yet because I'm still working, but maybe in 2 years. And then you and Dan can remain friends. And Mutual of Omaha, as you guys might remember the Sunday night animal show after Disney. I remember it. My mom and dad told me when I went to work for Mutual of Omaha, they told me what a great company it was. Big insurer, 110 years. So we probably stood the test of time, and we'll be here and ready for you when the time is right.
Thank you very much, James. Thanks. I hope you have a wonderful rest of the week, enjoying the 4th of July week, and we'll be in touch very, very soon. Thank you.
Thank you, sir. All the best to you and yours, and hopefully the fireworks and the hot dogs were good yesterday.
Couldn't have been better.
Thanks,
James. Have a great day.
You too.